Hey, so this is day 5 of the 3k count challenge, and as you can see I'm up 190 for the day. And as you can definitely see, I over traded today, so I usually cap myself at 3 trades a day. However, I took 5 today. So what I'm going to do, just to make life a little easier and a bit clearer, I'm going to filter it by the stocks that I traded in this symbol, just so it's a bit clearer. So we'll start with Oracle and we'll break down all the entries and exits. So the initial entry for Oracle was 1403 for the first lot, and I entered with 4 contracts for the 157.5 put at 1.07, and I exited at 1406. So let's break it down. So what I seen on the daily chart was there's a gap fill to the downside, and as we approached towards the low of day, volume did start to pick up. However, it was significantly lower than previously, which I overlooked, and that was my fault. But as we started to approach, I entered with puts, the 157.50 puts, and as we pushed up, what time was it? 1406. As we started to push up, because it was 0 DTE and so same day expiration, the premiums, especially those that are at the money or out of the money, they lose a lot of value and pull back. So as we pulled back quite aggressively, although I didn't trigger my stop, I wanted the stop to be a 5-minute candle close above 159. Although I didn't close above it, as it pushed aggressively, the premiums did take quite a hit, so I exited at 0.72, which was just slightly over 30%. And my goal is to have my losses on the same day, like 0 DTE contracts, at 30% or below. So this was slightly over just because I got filled a little later. But as you can see, that eventually my stop, I never stopped above it, but I didn't want a big loss. And minimizing losing, you'll see exactly why you need to keep your losses minimal. So that trade was done. Then I entered with another 4 contracts at 1411 at 1.06. So as we came back and retested, this on this particular candle, I believe, what time is 1411, yeah. So on this particular candle, as we then again try to approach the gap fill, again I got faked out and I ended up exiting for a loss at 1427. And it was on this particular candle again. We pushed up, although we didn't close above my stop loss. Sometimes holding the contracts on 0 DTE above your stop loss, like waiting for the 5-minute candle close, it can really take a hit because you don't know where the candle is going to close. So it could close here, further up, and it might not close at all, but that's too big of a risk that I wanted. With a small account, you want to keep the losses small. So as it tapped above this, I realized, okay, it's not working out. I want to take my loss, and if we do re-enter the gap fill area, then I can enter in. And although the as we approach the gap fill, the particular volume was quite high, and on the pullback it decreased, which is a really good indication, but I didn't want to take a bigger loss than I needed to. So again, it was about a 30% loss. And then eventually the gap fill did work, so I entered at 1433 at 1.07. But again, the 157.5 puts, which were the at the money contracts, and entered on this particular candle. And my stop loss this time, I changed it to 158. I wanted to keep a tighter stop just in case I did get stopped out. So as we pulled down, we pulled back, and then we just continued, and I exited on this candle, as you can see, at 1447 at 2.10. On this particular candle, as we pushed down and made new low of days, I took my profit and I walked away because I had 2 previous red trades, and I also had coin, which was the first trade. But I'll recap that over now. But I had 2 losses on Oracle. This was the last one, so I just wanted to take my profit. And to be honest, I was up 94% on the trade. Yes, it did continue filling the gap, but I didn't want to risk my profits because I was down quite a bit for the day. So I was happy with that. And so as we came down in this one trade, actually the net profit profited more than the previous 2 trades. So it took me from being red to green, and that's exactly why you need to keep your losses small. And that's Oracle, and then we'll do coin. So this was the first trade of the day, 1345 to 1349 coin. So for this particular trade, I had a key level at the 200 mark, and as we bounced above it. So the initial trade was for the upside. As you can see, 202.5. The calls, they were at the money for 216, and I exited at 13.49. So I entered around here. As we broke previous, because we could see there was a hammer candle here and then again a hammer candle, so we were bouncing off this level. The buys were really strong at this level, and so as we broke this high of the candle, I entered, and as you can see, I entered right at the top and it just flushed. So I entered 45 and exited 49. So within the same candle, I just took my loss and walked away, and that was $138 loss. So entered at 216 and exited at 147, and PLTR entered at 1401. So I had a key level which it rejected quite heavily here, and at this point I waited for a pullback, and then as we continue to break down towards broke this previous candle's low, I entered with puts. So I entered 152.5 puts for 1.07 and purchased 4 contracts at 1401, and I actually sold PLTR up here at 1.52 at 1439. So as we moved down, I brought my stop close from closer, and I exited right here as we formed this hammer candle again around this particular wick fill area, and I thought, okay, we're gonna possibly hold and possibly reverse. So I took my profits because I was down for the day and I walked away. But as you can see, I should have held on. There was no reason to, it didn't even break this previous candle's high. There was no reason to exit, and it did eventually work in my favor exactly how I was expecting it to. So that was a really big mistake on my part. I took profits earlier than I should have. So instead of it being a 190 day, actually would, if I continued with my plan, it would have been like a $300-400 day.